Hello, and welcome to Baltic Horizon Fund Investor Conference webinar about financial results in the first half of year 2018. Today we are hosted by the fund manager Tarmo Karotam. All questions will be answered after the presentation. However, you can send in questions during the presentation by using the question box on the right side of the screen. Tarmo, you may start the presentation.
Thank you. This is Tarmo Karotam, fund manager of Baltic Horizon, and let me kick off this webinar. So the main focus of this webinar is to go over the financial results and the activities of the first half of 2018. However, since we are already in September, there are a few comments that I'm going to make also about the last few months after the half a year has ended. Some of the key events here are on the screen that took place in beginning of this year. We began with the closing of the acquisition of Postimaja shopping center. The acquisition was a long-term negotiation with the seller, and the main purpose of this transaction was to be ready and be prepared and be active in joining the two buildings together, since we owned Coca-Cola Plaza since 2013, and we had devised an expansion plan. And under one ownership, this was best to now be realized. This is ongoing process. We have currently architectural solutions finalized. We are still working slightly on the concept, but more importantly, currently we are talking to the city there to abolish the current detailed plan in order to have project terms for the new expansion submitted and received. So it will be a process that will still take some time, and I'll talk more about it a bit later. With this transaction, the seller came into the fund as well as an investor in order to gain from this long-term value-added activity that we have there. So they invested back within the transaction 2.35 million euros. We went through the annual report publishing, and there was also a webinar about that for last year. In April, we finally were able to complete the bond issue. I have received some questions before the presentation, so I will try to answer them during the presentation, and there's a few questions about the bond as well. So if in case I'm not answering some of these questions, then I'm happy to receive them also at the end in the question section. But the idea there's been many questions about why did you guys do the bond, is it really worthwhile? It's more expensive than bank debt, and what were the real reasons for it? So I can only start by saying that the Baltic Horizon is a long-term real estate investment fund, and it doesn't have a term. So our thinking in many ways is with a 5-10 year perspective, even longer. And the bond, I would say, financing and a real estate bond such as this hasn't really been done in this format before, because also there has never been a long-term real estate investment fund such as ours. We decided to do the bond for a few reasons. First of all, to start getting access to the fixed income investors. It's a huge universe of fixed income investors out there, and much bigger than than for example, equity investors. So the idea there is to start this process, to have the first bond put on the market, and yes, the beginning, the cost of financing is always more expensive. But when we look at what are our peers doing in the Nordic countries, in for example Finland, and in many cases, property loans, mortgage loans are not what these big groups are doing. They are getting financing very often at the holding level, and in this sense they have been able to also access fixed income markets, so to also do it through bond issues with really low costs. And when we know that today the Euribor is going to slightly increase, and what we see what's happening also with bank loan margins, then it is inevitable that the bank financing cost will also start to increase. Currently, I would say it's still, the margins are for good properties below 2%, but over time that will become more expensive. At the same time, in case our fund keeps on doing very well, and the bond investors gain more confidence, then in the future bonds may very well be at much lower rates. So that is just to say that we are getting ready for the periods of let's say economic cycles that are happening 5 years from now. So this is just the first step to that direction. There's also a question, is it better to pay? One of the reasons why we did the bond was to remove bank loan amortization, and is it really better to pay a little bit more for the bond in order to get rid of that? Then the answer is yes, because with removing of the bank loan amortization, we are able to retain to the fund approximately 1.6 million euros annually, and that is something that we will not pay then to the banks, but we can actually keep it within the system. We can use it for expansion investments. We can use it for potential increasing of dividends. There's a number of ways we can use that money. So that is definitely also one of the benefits of the bond, and getting less of a dependence from the banks. The bank loan agreements still are much more stringent. They have much more covenants than, for example, in the bond agreement. The terms are also available, so one can read about the main covenants there. And there's also been a question in this slide. You can see that initially the bond was subscribed by the Baltic institutional investors. It was oriented towards the Baltic institutional investors, and in total at the end there was eight of them, and the LHV pension funds took a large stake since they were looking for a product like this. And also some other institutions were participating, and it is I think important to mention that I understand that from what I've heard from the investors, that they have actually distributed now the bond further to their private banking clients and other investors. So I'm not sure currently how many bond investors we have, but probably much more than 8. So, but the 8 were the initial, let's say, subscribers. Now, we don't expect too much trading there, even though it was a request of the major investors to list the bond, which we did now a few weeks ago in Tallinn Stock Exchange, Nasdaq Stock Exchange. So it is listed in the Baltic bond list. But yes, we don't expect too much trading there. I think the investors are happy. And as I said, we keep it as a source of financing, as an alternative source of financing. And I'll get back to you about one other reason why we have opened ourselves up for fixed income investors. Now, going forward, yes, we are continuing to pay our quarterly dividend. Over the past quarters, we've been able to increase it due to good performance of the fund. And I think 9 times now we have paid consecutive times the payouts on it. So that is definitely going to continue regardless of other activities we are doing in the fund in the meantime. And a couple of other things that happened during the first half of the year was the acquisition of a adjacent land plot next to Domuspro shopping center in Vilnius. And we are planning to build an office building there for an anchor tenant, which we are looking for right now, and definitely to increase the Domuspro complex to also join the new additional office part to the shopping center, so it will become one of the largest complex in that area of Vilnius. LNK Business Center we acquired in August. I would maybe make a few comments there as well. We had capacity, current means in the fund to acquire another building, and we were looking to make an acquisition specifically in Riga. Why we liked the property, the first and foremost was the strong tenants that were there. We were able to prolong the agreement with the seller themselves, who is LNK Center, to 10 years, and Exigen, another anchor there, a good, well operating company with strong results. The banks also liked the building, so we got very good terms. We are yet to take on a loan on this one because we acquired with the equity that we had, with the money that we had. So the loan that we will take on this one is probably in the next, I would say next month, in order to prepare for an acquisition and for expansions that are happening next year. So I would say the yield was 6.5, is at the borderline for us. I think we are getting more and more, and have been more and more critical about the acquisitions. Let's say standalone cash flow acquisitions that one cannot really expand or do value-added asset management with. So this is a pure cash flow property. However, even though that the yield was below 7, the rental levels in the building are around a little bit more than 11 euros per square meter. So we feel very comfortable with these rental levels and think that the 2 tenants will stay there for a very long period of time. So all in all, a good addition to the portfolio of Baltic Horizon. And I've noted it before that our preferred, let's say, asset segment today is offices in Riga. And I'll get back to you about that a bit later. Now, just to emphasize a few things about Baltic Horizon, just to keep it clear for the investors and sort of remove any speculation. So what we are and who we are and what is our strategy? Our strategy is a diversified, low risk Baltic real estate investments into commercial real estate. We still focus on Baltic capital cities because that's where the population is growing, that's where retail spending remains strong, that's where much of the demand for office premises exists and is expected to exist and even grow in the coming periods. We try to adjust our strategy, let's say our focus on assets based on the trends and based on the economic developments in each of the 3 countries. And today we definitely see a trend of shared service centers and the demand for office space increasing in all 3 cities. We focus on new properties in order to offer our tenants the most efficient premises in terms of added cost or utilities costs, as well to manage and minimize any capex related risks. And of course, we are aiming to produce strong cash flow for the investors, dividends. So it's very important for us to keep a strong dialogue with the tenants. And in many cases, we are in discussions of current lease agreements, even though that they are expiring. Some of them expire only 5 years from now. We have today 12 properties, cash flow properties, plus then the expansion land plot in Vilnius, with a gross total gross asset value of 248 million. This is a standard slide that I always have in the presentation as well about how our properties are doing in terms of vacancy, in terms of rental levels, and we're happy to see that our occupancy overall remains high, remains strong. I think today we have some vacancy in some of the shopping centers. This is quite regular, and it is sort of a organic vacancy. A lot of work is currently put on Pirita. There are the satellite tenants that we need to still replace. We have had some new tenants come in there. There are lots of work what's happening there in preparation for some of the smaller tenants that are coming in. But and the similar things are happening also in some of the other shopping centers that we have. Unexpired lease term currently less than 5 years, and you can see our main tenants there at the back, at the bottom there. Some of the strongest tenants in the Baltics today. Now, a few words about the expansion projects. This is something that we have just kind of witnessed, that our properties hold some building rights, they hold some expansions, and slowly but surely we are preparing to actualize them in the coming years. As at this point, I need to emphasize that we are still a cash flow generating fund, so we don't do anything at the expense of let's say dividends. So we want to be mainly focusing still on cash flow properties, strong dividends, and future rental growth. Now, we cannot, of course, ignore these opportunities, and in addition to Postimaja and Coca-Cola Plaza, which is one of the largest expansion possibilities we have in the portfolio, we have also other expansion possibilities in for example, in Riga, in 2 of the cases, and one also in Vilnius. So this is an ongoing process. We have identified that the potential development of this could amount to approximately 70 million euros, and the value of those properties once completed close to 100 million. So it's definitely worth looking into. In addition to Postimaja, which is more of I would say a retail office mix, then the other expansions are mainly office, and one of the most, let's say, actual ones today is the picture on the left up. It is, if one can recognize there, Upmalas Biroi at the back, the office building that we already own, and then in front across the street would be a sort of a little sister of Upmalas Biroi called Upmalas Salas, Muku Salas project, and it's a small 4,800 square meter office building. We are in the process of moving forward with the developer, who is the same actually, who built Upmalas, And one of the key reasons we are also doing this is to find more premises and space for the current tenants in the building who are expanding. So basically, some of them were just moving across the street to the brand new building. And there are other opportunities here, but those are still in concept development phase. But just to note that we are doing this and planning to do this over the next 5 years. Now I need to come back to the bond again. You know, one of the reasons we also, you know, introduced our fund to the fixed income investors is that you know, fixed income money is less expensive than equity investors' money. And when we are doing, for example, these expansions in the future, we are currently foreseeing that a lot of the investment for these expansions, besides the bank loan, will come from fixed income investors. And we will most likely then at the right time draw in the money, have a special bond for a special project. Of course, we may also introduce some equity investors into this, but very likely we'd like to use the fixed income investor money to create value for the equity investors at the end of the day. And hopefully by that time, when we are ready to do the constructions, the bond coupon on these investments can also be lower than the 4.25% that we started out with in the spring. So just to keep this into perspective. Now, a few more words about the portfolio. The largest tenant currently is the Latvian Forestry Management. We are working with them as well on the expansion possibilities, since they are doing well, and some of the departments, interestingly enough, they have developed some IT systems for their management of their portfolio of forest, and they have even created some financial, not the financial, but it's like IT product, and now it is such a custom-made system that they have found that this can be actually sold to other forestry management companies globally. So they are becoming now a tech company in addition to forestry management. So very exciting was to hear that. The other tenants, as you can see, are there listed as well. Some of the largest being Rimici Forest and SCB Global Services. Down below, you can see now the segment and country distribution. We're getting more and more diversified with Estonia and Lithuania being the largest parts, but Latvia now also being more of making a bigger part of the whole portfolio. We are currently, I would say, pretty much 50-50% split between retail and office. Leisure is the cinema building, which can be still considered as well retail, but we are leaning towards expanding our office allocation. So as you all know, retail situation in the Baltic capitals is dynamic in many ways. New shopping centers are being introduced to the market, and as well, shopping as a asset class, retail as an asset class is ever changing. So we see additional risks there. When you ask a question about our current retail properties, how are they doing vis-a-vis these new additions to the market, I'm pretty sure that none of the shopping centers will be totally unaffected, but we think that city center retail and neighborhood, say supermarkets, will not directly compete with these large-scale development projects such as T1 in Tallinn and Acropolis, for example, in Riga, to be open soon. So we estimate that impact on our retail centers will be low. Now, I brought into this slide into the presentation, and it's actually about office demand, office premises demand, and this graph actually quite actively shows quite well shows how the startup community, the industry in specifically in Estonia, has increased over the past 5 years, and this is a demand that wasn't there, let's say 5 to 10 years ago. So the startups in Estonia have been active and successful in raising capital, also successful in renting more space for their offices, and we're happy to see that. We also think that this is only the start, and is likely to continue, but it's something to keep in mind when you're a property owner, office building owner in Tallinn today. So the similarly is happening in Vilnius, where there's about 23,000 people being employed by the financial services industry, and some of the names there at the left below, some of the world-known names are still expanding in the Baltics. If you look at the graph here, they can see that even though that Vilnius and Kaunas, who have been the most successful ones in this regard in the Baltics, have hosted these shared service centers more and more, they are far from being totally, let's say, a major player in this sector. So in Krakow, for example, and Poland, the Polish cities are really well known for that. So there's definitely room for Vilnius and Kaunas and Riga to grow. What we've also witnessed lately is this economic cycle, this real estate cycle that started after the crisis in 2009. First was very attractive to call centers and such shared service centers. Now, many of these call centers are being replaced by more research and development departments, and some of these tenants, for example, Barclays, who came into Vilnius some 10 odd years ago, is closing down some of their departments, whereas other tenants such as for example, Girteka is hiring more IT engineers than ever before. So I think as well, I don't want to talk too much about that, but definitely the migration topic is very active one, very important one. We have been attracting more and more talent back to the Baltic capitals. That's what I hear what the tenants are saying. And as well, we're more targeted towards having international employees come here to work, offering a good living environment and good salaries. So this is definitely something that is happening now more and more. I'm happy to see that. Okay, moving on to the finances of the fund. I think it well shows where we are today in terms of funding, and we are comfortable with the LTV that we have. The cost of debt is slightly now, including the bond, is slightly more than 2%, 2.3% precisely, and you can also see that the maturity of various loans and the timeline. So it's quite well diversified from 2021 to 2025. It may very likely be that some of these loans will be refinanced by a bond. And one of the maybe I'm trying to answer one of the questions here is that why are we doing these, I don't know, these bond issues or maybe potentially equity issues, and why are we even buying back our units? Isn't it better to to actually buy back units with the current operating income? The answer to this question really is that over long term, we are planning to grow our portfolio and look for good assets that suit the portfolio strategy. We will not, let's say, stop the growth at this point because of many reasons. And some of the reasons are, for example, the bigger you are, the more power or the more, let's say, leverage you have in the tenant world, where you can offer tenant solutions from one building to another. You can help them expand, you can help them shrink, you can help them turn around their businesses. As well, the bigger you are, the more power you have over financing, over your finances and the cost of financing, to be perfectly honest. So when we see our peers in the Nordic countries, they issue bonds at rates of 1 to 2%. So I think overall this is where we see ourselves as well in 5 to 10 years. And for that, as also sort of recommended by the rating agency Standard & Poor's, that we have a strong portfolio already of governmental tenants, some of the strongest financial sector tenants here. But in order to have even more diversification of risk across segments, cities, and asset types, then yes, we need to grow, and that's definitely the target. I've said it in the past that the growth target of the fund is 1 billion. And now, when do we get there? Let's see. We want to be very careful about growth as well, and diligent about properties that we buy. Now, most importantly, dividends. This slide gives you an overview of generated net cash flow of the fund and its operations. So if you look at the generated net cash flow row, GNCF, that's actual effective cash flow after all expenses that comes from operation. And this has been positively increasing. The dip there in Q3 last year was due to the fact that we were not able to invest the equity that we raised as quickly, and we had equity that was waiting to be invested in that quarter because of the tax changes in Latvia. We needed to do additional due diligence how to structure the deals. In Riga and Latvia, the deals have always been more difficult and more let's say administrative than in Tallinn and Vilnius, but yes, that transaction took us a bit longer. But we have been successfully increasing our generated net cash flow and our payouts, dividend payouts over the past quarters. And with the LNK building now acquired in August, we expect to keep growing our generated net cash flow over the coming quarters still. A little bit about trading, a little bit about liquidity of the fund on stock exchanges. As you see, we've had quite a bit of trading in Stockholm, but now more and more in Tallinn in euro. And it's been also interesting to hear from Swedish investors that the SEK depreciation towards euro has been benefiting them also from that point of view. But of course, that's very speculative to speculate that with the exchange rates. But most importantly, our total turnover is of units, or the liquidity has increased. And I think in terms of investors, we still have about 3,000 Swedish investors, about quite a few of them retail investors, and then about 1,000 investors present here in Tallinn. Financial performance slides are here as standards. Yes, the figures, rental income figures, have been growing, mainly because of new acquisitions. We've had indexation of rents that has also contributed to the growth of rental income, and we had some small valuation gains from the valuations of June in the summer. And financial expenses have also increased mainly due to new acquisitions, new bank loans, increasing of the portfolio, and also slightly because of bond. So that you know, we used to, before the bond, we had cost of financing about 1.8, 1.9%, and with the bond now inclusive, our total cost of debt or financing is 2.3%, as shown in the previous slide. As balance sheet, I think it's quite clear that before the acquisition of LNK, we had quite a bit of cash on our balance sheet, and most of it was used to acquire the LNK building. So today LNK building doesn't have a loan, but will soon have it and what with that money we are trying to make another transaction, close another transaction beginning of the year. We have, if you remember, Duetto 1 was a property we bought at the beginning of 2017, and there is a sister building being developed now by YIT in Vilnius right next to it. It is to be finished by November, and we have a pre-agreement there to acquire it at a similar yield level of 7.1%. So I think that's where we will use majority of the LNK loan money. And this is another snapshot of the equity and liabilities. Maybe a few words still on the financial debt structure. As you can see, our bank loans are 86% hedged, and as well the bond is a fixed coupon bond, so about 89% of our financing is hedged. It's with a fixed interest rate. And a few words about the NAV and the EPRA NAV. You can see the difference between the NAV and EPRA NAV is the deferred tax liabilities. Since the tax changes in Latvia are removed now, deferred tax liabilities in Latvia as well. So we have only these deferred tax liabilities in Lithuania today, and those are, let's say, potential expense items when one would decide to sell the property and then liquidate the company. But at the moment we have maybe a plan to sell only a Small Sky supermarket in the coming quarters, and develop or improve and add value to the other properties. One other thing, just to note that in Lincona office building, we're very shortly actually opening mini Rimi grocery store there at the ground floor there. So we're happy to add them also to the tenant mix. And I think last but not least, before I go into the questions, I would like to emphasize that investors keep an eye on the generated net cash flow figure, because that's what really shows the potential and the performance of the portfolio, how much cash is being generated. because it is the basis for the dividends. And overall, we aim to keep our dividends steady and over the coming periods. So when you ask me, there was a question that will we acquire new properties, or do we believe that the price levels are too high at the moment? I can only say to that we are constantly looking at the market and evaluating investment opportunities. At the same time, we have clearly said no to a lot of investments that are at prices and yields of at levels where they are not suitable for us, for our performance targets. We like properties that are in developing city areas where potential can be actualized in the coming years. And what I think I have personally noticed is some sort of bottoming out of yields, and there have been developers pushing their buildings for sale for more than a year now. So there's a lot of properties for sale, and developers that need to turn around their investments and free up cash are becoming slightly more reasonable in cases. So we are, developers are there to develop. We are there to, provide cash flow for our investors. So the developers need to exit many of them need to exit their portfolios and properties after development as soon as possible, because they will have to get into new developments. And that's where we have seen opportunities now at levels of 7% and above, and we're working on many of them. And so I would say that the situation has definitely slowed down, and the rally of the yields as well, because the buyers are still limited on the market, and everybody keeps their sort of approach very, very pragmatic and sane. So okay, let me see if I have any more questions here. There is one question that was asked before, that does the management and the management company have any fund units? Are we invested as well? Yes, we do. The management company itself has about 420,000 fund units, and so do the founders through their companies and directly. Myself personally, I have about 22,000 units today on my name, and in total it's about 1.5 million euros worth of units, and we are looking to buy more. Maybe one comment on the buyback. It's something that we introduced with the decision of the general meeting in May to the market, also as a message, that we do really believe in the value and in the pricing of the fund, and we believe that the NAV is a very fair measure. So, but that being said, it is still relatively slow scale, and I mean low scale, meaning that we have, I think today, bought back only about 300,000 euros worth of units. It is a tool that in a toolbox that we have decided to use in order to strengthen the capital structure of the fund, and what we have noticed is that it could be that in the coming months this tool is not anymore necessary to be used. I don't see any questions here. Is there any questions?
Currently, there aren't any questions.
Okay. I will see if I answered all of the questions, or if there's anything else, I'm happy to answer them. Maybe I think a standard question that I receive is are we still fundraising, and are we looking to invite more equity to the fund in order to buy new assets? We have been approached by several investors that are ready to invest into the fund out of principle. Now, my answer to them always is that we need to find good use for our money before we draw that money in. So currently, of course, there are many things I'm working on in addition to the expansion options, but so it may be possible if we can sign up a good transaction at the conditions that we believe in. So let me put it this way: we currently don't have any plans, let's say specific plans to raise either new equity or debt. But again, we are working on many acquisitions, and if some of these can be realized, then yes, we will go back to the investors to increase the capital of the fund and the fund size. Okay, I still don't see any questions, so perhaps then I would then thank you for listening, and happy to answer any questions over email if needed, and happy to give an update for Q3 in some period. I think probably in November. So thank you again, and all the best.